Hi, good morning, Kelly. Yes, it's Jobs Wednesday. Not necessarily a Friday, but every bit as important. Non-farm payrolls for January coming in twice expectations at 130,000. 130K, that would be the juiciest going back to April of last year when it was 158. Now, if we look at a couple of months worth of revision, they came in at minus 17,000. Now, let's look for average hourly earnings month over month, up 0.4. That's 1/10 higher than both looking back and looking forward. 0.4 would equal October last year. You are all the way back to the summer of 24 to find a higher month-over-month earnings number. Let's go year over year. 3.7 exactly as expected. 1/10 light to 3.8 in the rearview mirror. So how does that stack up? 3.7 would be the lightest since it was actually 3.6. Thanksgiving of last year. Now let's look at hours worked, shall we? 34.3. That increase, that's a good thing. That's up 1/10 from both what we were expecting and our last look. 34.3 would equal November. To find a higher one, you're all the way back to March of 24. Now the unemployment rate, maybe the most important number of all, and it moves down 1/10. 4.3%. All the naysayers out there, they're going to like this set of data points. 4.3 would be equal to where we were in August of last year. To find a lower number, you're looking at June of last year. Labor force participation moved up as well. More good news, 62.5. That would be the best since it was 62.6 in April of last year. And drumroll, please, the final number I'm going to give you is U6, the underemployment rate, and it comes in at 8%. 8%. Last look was 8.4. 8% would be the best going all the way back to July when it was 7.9. Now, for the bad news, but expected bad news, we're looking at benchmark revisions from April of 24 to March of 25. The original number that we were looking at was around minus 900,000, comes in at minus 862,000. So the benchmark revisions are a little less than expected, but some were actually thinking it'll be in the 700,000 camp. So that comes into minus 862. What are yields doing? Zoom, zoom, zoom is what yields are doing. We moved from 12, which was down 3 on a 10-year, to 4.19. That makes sense. A 2-year really screaming from 3.45 all the way up to 3.53. Why? Because these are solid data points. And one more thing I'd like to point out. I am really on this kick. I think seasonal adjustments are dead on arrival on most numbers. Yesterday's retail sales looked flat. I brought it out at 8:30. But if you look at non-seasonally adjusted, it was the strongest December on record at $818 billion. Kelly, Sully, back to you.